Welcome back to another Meet Kevin report. We are now on episode 93. Welcome back to another one. We are going to cover today, a few things. We've got, obviously, today, we've got NVDA earnings. That's going to be a big deal. You've got the FOMC minutes coming out today. A lot of people thinking the FOMC minutes are really going to tell us something new. As usual, I mean, we'll cover them, but because you never know what's going to be inside. But I think the big thing that we want to pay attention to with the Fed is realizing, hey, we heard what Kashkari said. Even Kashkari, who's not been a big fan of a pause, is indicating he's going to be able to be convinced to see a pause. And that's pretty much because, as the Fed has told us pretty clearly, hey, let's see what inflation does over the next couple of reports. One of which we already got, which was the April report. And then, of course, we've got our next report coming out just the day before the next Fed meeting. So we'll see what happens, but we'll get those minutes probably. Let me see exactly what time those come out. I want to say that's 11 a.m. That those will come out, but I'll get the exact time. And then we've got obviously more of the debt ceiling drama. It seems to be getting closer yet further away in a really weird way. That is, every day that goes by, it seems like, hey, we've got just a little bit more progress, but then, oh no, we're also running out of time and still yet somehow need more time. But then again, it's always worked out in the past, so fingers crossed it keeps going and we get these negotiations done. And this is over soon. So let's see here. Federal Reserve, FOMC minutes. We'll go ahead and find out the exact details of when those come out. But yeah, we do get those today for the May 2nd to 3rd meeting. And then, of course, I think really what most people are going to be paying attention to is NVIDIA. We'll do a little bit of an NVIDIA earnings preview in just a moment. I think that'll be fascinating to go through some of NVIDIA's advantages, but also some risk factors associated with NVIDIA. What about China? What's going on with China and all the good stuff? I want to take a brief listen just here to CNBC, see what's going on live, and we'll circle right into some of the content. So let's listen in here. Let's see what they got.
A healthier bank willing to step up and to resolve that bank in the public markets before it gets to the deposit insurance fund. That's not happening now
because of what happened in 2008 and the banks that got burned by taking on those deals, doing them really quickly, and then having the government come back later and say,
well, that's with government assistance. I'm saying without government assistance, because what's really in the last 2.5 years, it takes twice as long to get a bank merger approved than it did previous to that. The regulators are still rewriting merger rules that they haven't come out with yet. The risk premium that a buyer has to put into it about how long it would take to get their merger approved, going into a choppy economy with a sick bank as the target, that's a very tall bar for any bank to chin. So my view is that if there was more clarity on the rules on how bank M&A could happen, you could have a healthy bank step in, resolve it with their shareholders' money rather than needing the deposit insurance fund's money. And one thing we've learned too, even a surprise to me,
you've got a guy here talking, let's have less regulation because then we can take over banks faster. Yes, that's the solution to the banking crisis. Less regulation.
Industry pays for it, not taxpayers, but the hits are bigger. I think it'd be better to let a healthy bank take it over beforehand rather than afterwards.
Thomas, thanks for coming in.
Thank you.
Thomas Michaud.
Thank you.
Coming up, Fed Chair Jay Powell vowing to be steadfast in the fight against inflation. So should investors expect rates to stay higher for longer, and how should you be adjusting your portfolio? And take a look at features at this hour. We're looking at a lower open here as investors are looking to D.C. for some guidance on debt ceiling negotiations. S&P looking to lose about 15 at the open. NASDAQ looking to be down by almost 50. And a stock to watch, Intuit, BMO, raising its price target to 485 from 462. That stock is lower by almost 6% right now. We'll be right back.
Time now for today.
So also wanted to make a mention that we're going to try this on the channel soon, probably within the next couple of weeks here. We're going to start trying to do these basically financial audits. Those have been in a pretty popular demand. And so we're going to travel. We're going to start with course members. We're going to travel to different areas around the country. And the cool thing is we're going to do them in person. So we'll be able to see people's situations in person as well as talk finance. So I think that'll be pretty cool. A lot of people have been asking for my thoughts on this. And so there it is. Then you've got the FOMC minutes. They do come out at 11 a.m. as I expected. They are for the May 2nd to May 3rd meeting. And so those will be out at 11. Tonight at 3, and these times are Pacific, at 3 p.m. Pacific, you'll also have Ron DeSantis, who's expected to make his presidential announcement on Twitter Spaces tonight. Now, this is a pretty wild one. So think about this. Ron DeSantis, whom Elon Musk has previously endorsed, but now no longer potentially endorses, as Elon Musk says, hey, I'm just not going to endorse any candidates in the cycle. Elon Musk is now indicating Ron DeSantis is going to come right on to Twitter Spaces and announce his presidential campaign on Twitter Spaces. Now, this is quite remarkable, and it has a lot of people wondering, is it because potentially Ron DeSantis wouldn't otherwise be able to get as big of an audience, and maybe because of the Trump effect, if Ron DeSantis didn't have a massive audience cheering him on, people would think he was somehow weaker than Donald Trump going into the campaign. Obviously, Trump fans are like, duh. And DeSantis fans are like, nah, man, the crowd doesn't matter. So I think this is fascinating because you have Elon Musk, who has aligned himself, at least with his commentary, more so with the center-right, or some would argue even further to the right. In fact, there are some on the left who just ultimately despise Elon Musk now because of his political commentary. I've actually been blown away with how extreme some of the commentary is. I really try my best to stay away from the negative Nelly nonsense of negative commentary. And boy, one of the places you could really see the hate is when you're on Twitter and Elon says something or responds to something. There is a substantial community of really hate, like big haters against Elon Musk. And these are people, when you look at their profiles, they're very clearly left. They lean extremely left. They don't make that a secret. And they have gone from liking Elon Musk to absolutely despising him. So to some extent, there is some political maybe eye rolling that's going to happen from the left of like, oh, of course, Elon's Twitter is going to be the platform that Ron DeSantis ends up announcing his candidacy on. So that's sort of an eye roller for those on the left. But for others, either center or on the right, others indicate, hey, this is actually kind of cool. This is, first of all, unprecedented. You've got Elon Musk, who will basically be taking Twitter from this company that was widely unprofitable to cutting about 80% of the staff to getting the app operating with 80% of the staff. I mean, think about it. Other than the occasional potential outage, and if anything, those have been far and few between, we actually haven't really seen any kind of Twitter crash or failure. If anything, we've seen a lot more features come out over at Twitter in the time that Elon Musk has been in control. Now, Elon Musk argues that's because they don't have the censorship police anymore. And some people do, I think, fairly give some criticism to for example, recently we had a shooting at a mall in Texas. That was just north of Dallas, I believe it was. Next to Plano. Was it? Or was it in Plano? I think it was right next to Plano, Frisco. I can't remember exactly where it was. But anyway, Twitter algorithm was, encouraging pretty gory images. And so there are some criticisms over, hey, maybe some of these should have at least had like a blur filter over them, or like a viewer discretionary warning or something. Nobody wants to say the C word, right? The censor word. I mean, Twitter's actually done phenomenally well. And Elon Musk yesterday was actually in an interview with the Wall Street Journal, and he talked about this announcement coming. So that'll be at 3 p.m. today. This will also be something where Elon Musk is really able to show, hey, how many people can you get into a Twitter Spaces for an event like this. And every time Elon Musk is in a Spaces, the amount of people in it is usually in the neighborhood of 50,000+. Now, what's actually fascinating about that is it could be quite strategic from somebody like Ron DeSantis, because Ron DeSantis might not have the physical crowd that Donald Trump has, which might be, say, 500 to 1,000 people, plus whatever kind of internet viewing. But if people are in a Twitter Spaces and Elon Musk is in there and they're like, wow, 50,000 people, and I'm sure it could even be hundreds of thousands, right? People look and go, wow, 100,000 people listening to Ron DeSantis's announcement. In an interesting way, it's sort of a perfect game plan from DeSantis, where you're going to automatically get way more people there because Elon Musk is there. And on top of that, it's a perfect test for Twitter to show how stable it is. Hopefully nothing goes wrong, knock on wood. But beyond that, you also have this argument that Elon Musk makes that, hey, look, advertisers are coming back. They're lifting their uncertainty warnings on advertising on Twitter. And maybe Twitter will end up being profitable this year. And hopefully we could see more of that neutrality return to Twitter, where you get, both the left and the right on Twitter. We'll see. Now, as far as, that's not to say that the left isn't already represented on Twitter. They're there, just maybe less so than the right. At least that's what it feels like. But Twitter by no means is like a Rumble, right, or a Truth Social. Elon Musk did also talk about his, in the Wall Street Journal interview that he did, he talked about his long and complicated schedule of how he basically tries to dedicate a day to various different companies, whether it's SpaceX, Tesla, Twitter. I did think it was interesting that he said that today was supposed to be a Tesla day, yet he spent 1.5 hours on the Wall Street Journal interview, and then he said he'd probably end the day over at Twitter. And really, he argues that a lot of the cuts that he made at Twitter were people who really didn't end up providing a lot of value to the company anyway. Those cuts, by the way, have actually led to inspiring a lot of different firms to cut positions and wonder, wait a minute, do we really need as much mid-level management? Do we need this many layers of hierarchy? And so you're finding this broad sort of flattening of the corporate world. And this is leading some folks to say, well, this is what the corporate recession looks like. This is what the white collar recession is. Remember, we went into this recessionary time thinking, oh, inflation's high. Poor people are going to get screwed because a disproportionate amount of their spending goes to things that are becoming more expensive: energy, gasoline, rent, and food. When you're broke, you could be spending 50 to 80% of your money on just the things that I just listed. When you have a lot of money, and let's say maybe you're a white collar worker, and sure, maybe you're living paycheck to paycheck as well because you're spending all your money. The pie that you're spending usually on food, energy, gasoline, and rent is maybe in the neighborhood of 20 to 40%. You're just spending more on discretionaries, entertainment, travel, whatever. And what's fascinating about this is that in this recession, we actually ended up seeing the poorer cohort make a lot more money, even in real terms. The lower levels have seen minimum wages rise above the rate of inflation in real terms. If you average together all wages, we've seen slightly negative real wage growth. And that's, in my opinion, likely due to the fact that you've seen this sort of stagnation in white collar jobs and pay raises for white collar workers. And so you've seen this white collar recession where people who are, finance professionals or in the medical field or whatever, who make maybe more than $100,000 a year, are realizing, crap, asset values are down. Pay raises aren't coming in. Bonuses aren't coming in the way they did. Stock-based comp isn't coming in the way it is. Unless, of course, you're Zoom, which, we'll have to talk about Zoom later because that's a crazy one. But, boy, it really is a fascinating twist of this sort of recessionary environment. And to some extent, Elon Musk's Twitter flip-flop has inspired other companies like even Facebook to flatten their organizational structure and get more people actually providing value rather than just managing. This is one of the reasons that I've so widely argued that the best way to make sure that you don't get laid off and to make sure that you make more money at your job is to make sure you're the employee providing the most possible value. This is why I have a program on how to make more money and get SH&IT done faster, because I show you, here's how you can provide more value. Here's how you can be productive with AI. We've got the AI lectures dropping on June 1st, and then we'll have a big price increase again after that. All that information linked down below, though. More importantly, though, when we look at Elon Musk continues to argue this need for an artificial intelligence business to rival Google and Microsoft. He's talked about really funding his own AI competitor to OpenAI or which obviously is in partnership with Microsoft, massive investment from Microsoft, and then your Bard and Google competitor, or a competitor for Bard and Google. Elon Musk also hinted at a Tesla gigafactory in England to be announced by the end of the year. Now, this I thought was really remarkable. I've always been a big fan of Elon Musk suggesting, hey, let's just print more gigafactories. He's anti the idea of copy and paste, so I was wrong about the idea of just copy and paste them. He seems to be more of the mindset of each gigafactory should have its own purpose. Maybe Model 2 in Northeast Mexico, as well as cheaper batteries, right? You get much cheaper labor in Mexico, $3.50 per hour, which actually raises the standard of living in that area. But England came a little bit as a shocker for me. Apparently, they would make that decision in the coming months. He says, quote, we're not currently looking at new locations, but we'll probably towards the end of the year. Asked about the prospect of establishing a site in the UK, Musk said he would, quote, strongly consider England. I'm not sure if that's because the Wall Street Journal CEO Council event that he was at was being held in London. So part of me thinks there's no way in HE double hockey sticks he's actually going to end up picking England. Part of me thinks that was just a nice way to be like, oh, I'm at an event where, you don't have to be physically there, right? You can be remote for this as well. But the point is, if you're presenting to an event that's based out of London, of course, you kind of have to go, yeah, sure, we'd consider that. Most people think it's probably more likely to be India or Indonesia, something where labor costs are low. Remember, even though in the future we hope the optimists will take over some of the labor costs, it's a long way out. Like if you're in manufacturing, you got a little bit of time before you're getting replaced by a robot. Surprisingly, physical, everybody always said, oh, creatives and office workers would never get replaced by AI. It's going to be the manual labor that'll get replaced first. It was literally the complete opposite, much like the recession hitting wealthier people more than poorer people, not trying to take away from like the very, very lower end that's getting screwed by inflation. But much like that was the opposite. You kind of also have this opposite with AI. AI is like destroying creatives and human resources and legal jobs, 10 times the rate that it is manual jobs. Because, well, AI really isn't affecting manual jobs. I mean, like, if you're in construction right now, you should be like, dude, I'm set until I retire. Like, I'm good. It's going to be a long time before a robot does my job. So, but anyway, you've got Giga Germany producing 5,000 cars a week, which is great. That one has made it a little tough. Elon Musk has, that one's been a little tough to ramp, and Elon suggests regulation in Germany and the European Union make it very difficult to conduct business there. So in my opinion, it'd be very difficult to imagine something in Europe. It'd be difficult to imagine something in the United Kingdom. I would much more expect something in India, Indonesia, Asia, whatever. I've actually, in a weird way, been a fan of, hey, just throw up another factory in China. Some people get mad at me for saying that. They're like, wait, everybody's trying to get away from China. It's like, that's fine. I like to invest in China via American companies. I don't like all these like bans on China and stuff. I think it's bad. I'd rather American companies go figure out how to make money in China, and then I can, take a piece of that growth in China by investing in those American companies that I could personally vet and believe in. When you start looking at financials of Chinese companies and let's just say I trust the American ones a little more. Anyway, so Elon Musk wants to be the third horse in AI. We talked about that. We talked about Ron DeSantis, talked a little bit about the Tesla location. I think the big announcement there is that we're probably getting another announcement on a gigafactory. And then, of course, it'll be fascinating to see how things go with Twitter later today. It's great as well that Elon Musk has selected another CEO to essentially take over Twitter. So hopefully the hope is that Elon Musk has more time for Tesla or other businesses, though we'll see how much of that ends up being sort of a figurehead. Tom Zhu, by the way, over at Tesla, he got stock options of 339,000 shares that are going to vest equally 1 month at a time over the next 48 months. That is the equivalent of getting about $1.2 million worth of shares every month. 1.2 mil a month, dude. He's a senior VP of the automotive segment. Pretty sure right now he's running Giga Texas, the ramp over there. A lot of people see him as slated for potentially taking over Elon's role as CEO. But we'll see. So, this gives you a little bit of an update here on what's going on with Elon and the DeSantis camp and Twitter and Tesla. It's really remarkable. So we'll see. I will add one more thing. There was an ad supposedly that was posted on Twitter. It was the Tesla Asia account that posted it. We don't know if it was actually an ad or if it was just sort of a consumer testimonial or what. But I'm just going to put it this way. I'm not going to play the whole thing. It's right here. And while the graphics are awesome and everything about the graphics are cool, I don't know that I'm really excited about this. And if this is sort of the direction of ads that Tesla is going to go with, I think they're missing the point. So they started out really great. Like, let me play this little clip here for you right now. So she talks about how she's a branch manager in the financial industry. And this line that she says is great. But the problem is the example she gives, way too basic. Listen into this for a moment here. We'll play it. Let's see. I can't hear anything. Hold on. Silly Kevin. You have to unmute the darn video for people to be able to hear it.
I have two young kids, 3 and 5 years old. The technology attracted me. It looked different. It felt different. I would say in many small ways, even though it may not be evident upfront, but in fact, the day-to-day drive is one of the smoothest and safest. Every day, I have to drive quite long hours. Sometimes it can get very tiring. With the auto steer, I'm able to put my mind at ease. It will warn me whenever I'm getting too close to other cars, as well as keep myself in the lane.
Okay, hold on a second. Warn you when you get too close to other cars. Basic. Every freaking company has a car that does that. Stupid. Wrong. No, that's not what you should be pitching. That's basic. So basic. Keep yourself in the lane. Come on, man. 10-year-old cars do that. This is old news, man. They started so strong. They started with the idea of this Tesla has features that I didn't even realize existed. And I remember saying at the shareholder meeting, I'm like, why don't you tell people that you improve the seatbelt tensioning systems or the airbag deployment systems over the air with over-the-air updates? Why don't you promote exactly how safe you are and the ratings of the safety, how your safety ratings compare to other vehicles? Or why don't we talk about exactly some of the features of auto steer? Like, wait a minute, it's more than just lane keep or keeping you from crashing into somebody else. The thing is going to turn for you on the highway. It'll change lanes for you on the highway. It'll go to the faster lane for you in the highway. It'll overtake other vehicles and then get out of the left lane for you. It will do everything for you. It will get off the highway for you. And that's not even full self-driving. It will make it so that when you are in a foreign city going on vacation or whatever, and you're like, oh my gosh, there are 50 different highway off-ramps here. How do I know which one to go on? We've all done it before. We get off the highway and then we're like, okay, is it left now and then right? Okay, but which right is it? Because there are 2 ramps over there. Is it the first right or the second right? It's a disaster to navigate some of these places. You know what I just do now in the Tesla is I just go, screw it, self-driving. If I'm not already in self-driving, I just press the auto steer button and boom, guess what? It picks for me and it gets me off the highway because it's changing lanes for you in the highway. Those are the things they should be talking about. Where is that? Where's the other car making all those navigational decisions for you, right? So where is that in this ad, Tess? Again, I don't know if this is an ad or if it's just like the, testimonial or whatever here. But so far, this is just like boring. This is a boring ad. They got visuals down. They got visuals down. But what they are saying is boring. So if Tesla, if you're listening to this is not unique. Boring. Fix it.
I think end of the day, when we drive, it's about getting from point A to point B and in the safest manner possible.
I've literally said that same quote. I mean, I know a lot of people said that, but look, okay, kids, this is good. Let's see what they have to say about the kids.
Of course, because also I do have 2 young kids and I'm a mother myself. Priority of safety is at the top for me. In terms of my kids, I really enjoy bringing them out. As a mother, of course, driving, you can never expect what kids might do. That's where the child lock is absolutely very important.
You're talking about the child lock? Are you freaking kidding me? Every car has child lock. Who made this video? This is like so dumb. The cars from 20 years ago, 30 years ago had child lock. Well, I don't know what the kid's gonna do. Is he gonna roll down the window or try to open the car in driving modes or whatever? Oh, hold on, everybody. Revolutionary Tesla here. Child lock. Come on, man. Talk about the cabin overheat protection. What did Elon say at the shareholder meeting? No child or dog has ever died inside of a Tesla when it was parked because of the cabin overheat protection, making sure that the temperatures inside the car never get to a deadly level. What other car manufacturer can say that? Oh, wait, nobody, because people leave their children and their animals in the car on hot summer days because they think, it'll just be a few minutes. And then the line at the checkout takes longer and you come back to dead babies and animals. It's terrible. But child lock? Oh, my Lord.
There are really a lot of entertainment for them. The beach buggy game. And it's very real. Typically in Singapore, the weather is really hot. The car can really be heated up. So what I like to do is I like to use my phone to switch on the aircon before I even go into my car.
Oh, come on, man. That was the opportunity. That was the opportunity right there to talk about the cabin overheat protection, not about how you could turn the AC on. Dude, a 2008 BMW that I drove once could do that. That was in 2008. It wasn't a big deal. Even when you're walking up to, you just press on the little remote, like engine start or whatever, remote engine start, and then it preconditions the car for you. That's old. Oh, you were so close. And the kid turning the wheel, they were trying to show that the kid can actually steer the video game with the steering wheel. But that's not what they showed in the video. They showed a video game playing, and then they showed the kid playing with the wheel. They didn't link the two. You need the over-the-shoulder shot to link the two, to indicate that when the kid is turning the wheel, he's actually playing the video game. Who shot this? I'm not an advertising company, man, but this stuff is basic. Oh, come on, Tesla.
Yeah, so this is something that I never thought could have happened.
What?
One thing that I don't really...
You never thought you could precondition a car's temperature? You realize GM has done this forever? These are the features you're going to talk about?
Enjoy about going to the petrol kiosk is the fumes.
Nobody cares about the freaking fumes at the gas station. Nobody cares. Nobody freaking cares. Okay? Yes, you go to the gas station, your hands are nasty because you have to take the little pluggy thing and you plug it into, you stick the gas nozzle into your car and it's nasty. You got to hand sanitize, okay? Best trick is put some $2 hand sanitizer in the side of your door. But guess what? You got to touch the nasty supercharger thingy if you go to the supercharger station. So that's nothing new, right? Okay, yes, oh my gosh, gas fumes. You're there for 3 minutes, okay? This is why people don't want to work at gas stations, because they don't want cancer working at a gas station. But you're there for 3 to 5 minutes. It's not a big deal. Nobody buys a car or does not buy a car because of fumes at the petrol kiosk. This is stupid. This is what you guys are wasting your time on.
I think everyone knows how petrol smells, and it's not just about the smell. It's in fact...
Some people like it. Yeah, here, Max says it. Some people when we take off on the plane and we're, turning the engines over and you smell some of that kerosene start burning. Some people are like, oh, I love this smell. I mean, I don't really particularly prefer it, but anyway.
Harmful for our health. I imagine a future without fumes, without smoke. We are able to all wind down our cars. We are able to breathe freely without all this.
Okay, Charlie just says here in the comments, I think these might be region-targeted ads. Are you trying to suggest that the people in Singapore don't deserve the real truth about how great Teslas are? Like, come on. Like, I don't care what region you're in. I really don't care what region you're in. If the features of your Tesla are lane keep assist, alert you when you're going to crash into the car in front of you, and child locks and no gasoline fumes, you have told me nothing I didn't already know. You haven't informed me. You've wasted my time. That's what you've done. You've wasted my time. And you've got an English speaker here. I hate to say it, but they're not exactly the most clear English speaker. That is a problem. That's fine if maybe it doesn't seem like it's overdubbed, right? But like
Chemicals that are out in the air. I would say it's one of the greatest gifts that my kid can have in terms of their future.
No. Just no. Damn it, Tesla. Tesla, exactly. Tesla should fire their marketing team. Oh, wait, they don't have one. I don't know who's doing this, but no. We're going to reply to this right now. We're going to reply to it right now. We're going to make this very clear. What are we going to say? If this is Tesla's version of advertising, I'm out. Send. Boom. I'm sorry. That's horrible. Oh. Okay. I'm done. I'm done with Tesla. So, that ends our segment on Tesla. And if you haven't had the opportunity yet to check out the wonderful programs on Building Your Wealth link down below, especially that income course on building your income and maximizing your productivity with artificial intelligence, with the AI lectures dropping on June 1st, check out that link down below. Make sure to subscribe. Keep in mind, those AI lectures are going to be all about how we can actually use AI to be more productive, rather than just here's a list of tools. It's how can we actually use this in our daily routine. All right, let's listen in over here. Constructive criticism would have been better in that reply. What did I just do for 10 minutes? Am I supposed to put a 10-minute reply into there? Here's what we do, okay? Very simple. Copy link. Paste link around 22-ish min in for a 10-min explanation. There. I referenced the video. Simple. Robert Daly, are you not in the courses? Because we pretty much every single day do course member breakdowns on earnings and fundamental analysis on the earnings calls and reports, unless you mean like live at the closing stream, because we do the open stream together. But anyway, let's listen to CNBC over here.
National security has always been the basis by which authoritarian regimes have seized power. And you could quickly see the argument of national security being the basis to shut down a business to be weaponized against Twitter, or it can be weaponized against AI, or it can be weaponized against Rumble or Parler or any business that the administration doesn't like and sees as a potential security threat to democracy. So that's the precedent that we're setting, and that's the chilling effect we have on innovation as a result of this action from the state of Montana.
But my guess is that that's probably a bigger concern for your clients. The idea that, let's say, the national government does step in and say that this is a security concern. They absolutely have the power to do that. It's not a slam dunk on any sort of legal battle at that point. Then what? What do you do?
Well, we've heard the argument of national security concerns, and ultimately it comes down to the First Amendment. Imagine if the government came in and decided to shut down access to your website or your app because of quote unquote national security concerns. That is a clear violation of the First Amendment. Our founders recognized this when they created the Bill of Rights, and that's exactly what protects us. So if the government decided CNBC is a danger, which would be, of course, absurd, they couldn't just come in and shut down access to your website or your app. And that's what we're seeing out of Montana. That's what we're seeing out of these discussions on Capitol Hill, is the government ultimately deciding for the American people what websites they can visit and what apps they can download. And it's not just an impact on TikTok. You saw an action from all the creators whose businesses rely exclusively on access to TikTok, on the ability to have their voice being heard. So likewise,
free speech is a huge argument for this, but are you saying that the government can never say that there's a national security issue, or do they just need to back it up with proof?
I mean, it's a really tough hill to climb. So you saw this effort from President Trump when he was in office, trying to take down TikTok on national security concerns, went to the court, and the court threw it out pretty darn quickly. So it's a very, very steep hill to climb, because at the end of the day, you have to define what is a national security concern. And the way that the United States operates is we hold the First Amendment as sacrosanct, the protection of free speech, and challenge.
Okay, this is getting exhausting. Why don't we talk about NVIDIA? I don't care what Montana does. Who lives in Montana anyway? What is that, a territory? Montana population. 1.1 million. Holy moly. That's nothing. That's like 1/300th of the country lives in Montana. All right. Let's talk about something else instead. How about we get into NVIDIA? NVIDIA would be fun to talk about. Yeah, we should talk about NVIDIA. All right. So, in order to talk about NVIDIA, we got to start with financials. So let's send those over, and then we'll go through some research on NVIDIA. We do have earnings today, so prepare for that. We'll go through earnings expectations as well, and we'll see what we think about their valuation and their potential on earnings here. So earnings expectations coming out after the close for NVIDIA. Boy, that's going to be a good one. I wonder if we almost have to live stream that one. It's probably going to be so good. I'm surprised, though. Wow, the implied volatility is actually low. But then again, the entire market's volatility is a little lower than you would otherwise assume. So we'll go through this in just a sec. Let's get a few more of these earnings talks up. And then we can go through NVIDIA. I like NVIDIA, but I don't know, valuation seems a little stretched. Some people are calling it the new meme stock. My eyeball's itchy. All right. Upgrades and downgrades, I could quite frankly care. I could not care less about them. Because what I found is these institutions will literally just downgrade a stock as the stock is falling and will upgrade the stock as the stock is rising. Like basically just do the opposite of these upgrades and downgrades. It's ridiculous. Like the last thing you should ever look at in finance are upgrades and downgrades. They're so dumb. They're so bad. All right. Let's talk about NVIDIA. All right, let's write this down. I got to mentally prep for NVIDIA. All right, I did it. Well, let's talk about NVIDIA. Reports earnings today, but we've got to go through some of the big competitive advantages for NVIDIA even beyond earnings. We'll talk a little bit about earnings expectations and some of the things to look for in the finances. But most importantly, we want to talk about what makes NVIDIA an interesting, potentially unique investment opportunity in the long term. What are some of its advantages? So outside of the short-term news, what's the long-term thesis for investing in NVIDIA, and what do those finances look like? Well, let's start just there. So when we actually look at the finances, we can see that NVIDIA, much like most of the chip companies, are quite frankly in a bit of an earnings, recession. This is the latest NVIDIA report for the year. This is their latest annual report. For the year ended January 2023. So in other words, the full year of basically 2022, Jan to Jan. You can see that revenue was flat. While revenue was flat, their cost of sales, so their cost of goods sold, their products, cost them 23% more. So their income was flat, but 23% more cost for the actual products. Their research and development up 39%, sales and general and administrative SG&A up 12.6%, leading to a net income decline of 44.7%. That is a negative 44.7% decline in net income. This is an example of your earnings recession. Now, it could be argued that, hey, look, the company exploded. And the fact that you have flat revenue is actually fantastic, because think about it. You went from 16.6 billies in January of 2021 to 26.9 billies of revies right after that, which is freaking awesome. Because if you look at that, it's like, hey, wait a minute, Kevin, that is a 62% increase. And the fact that we're flat off of that, not bad. It's literally like growing like this, then having this exponential explosion, and then being flat. I wish it didn't correct, because I liked my drawing better. It's kind of like growing like that, and then having this explosion of exponential, and then flattening. At least it didn't plummet back down to where it was just sort of a little triangle there, right? So this is actually pretty powerful. Even though costs are going up, the revenues are flat, and the net income is like down 44%, you've left the stimulus era, right? So of course, you've got these really negative comps. And these negative comps have led a lot of these manufacturing companies, or sorry, not manufacturing companies, these chip designing companies like NVIDIA, AMD, right? They all pretty much use TSMC to manufacture. Maybe Intel will come in the race in the future, though they've got some work to do. They actually think that Intel could be a big player in the 1.5 to 2 nanometer chip space. We're not quite there yet. Right now, we're working in the 3 to 5 nanometer chipset space. And that's the spacing of transistors and chips. The smaller, in theory, the more efficient and better these chips could be, the stronger and more powerful. That's all down the road. Intel could be a game changer in manufacturing probably in 2024, 25, 26. Although they could also be a value trap and end up going bankrupt. But that's really a topic for a different video. We talk about Intel a lot in the course member streams, mostly because that thing's trading for a PEG ratio of like 0.5. Now, before I lose you on PEG ratio, remember what a PEG ratio is. It's how much you're paying for growth at a company. And one of the things that I like is I like looking at companies usually around a 1.5 to 1.69, 1.7 PEG ratio. That's about where Tesla is trading now. It's about where Enphase is trading now. Etsy is trading below that right now. The problem with something like NVIDIA is it's trading for a little bit above that range. Right now at $306 per share. $306. This is your share price, and you'll see how to calculate PEG as well. Right now, we're looking at a full year of 2023. So first quarter earnings aside, full year of 2023, which is their fiscal 24, we are looking at earnings of about $4.60 projected. We'll get some guidance on that, but it'll probably be somewhere close to that. 306 divided by $4.60 puts you at a PE ratio, a forward PE ratio, so we say FPE, a forward PE ratio of 66.5. It's a little bit rich. Now, the company in terms of growth is expected for 25, 6, 7, and 28 altogether to average about 25% growth. Well, if we divide by 25% growth, so in other words, that PE by 25%, removing the percent is what you do for this math, divide 66.5 by 25, you get a PEG ratio of about 2.66. Unfortunately, just on a simplified valuation measure, that's quite a bit above where we probably ought to be, if closer to 1.6, 1.7. It's about 66% above that. That's quite a bit stretched right now. Now, maybe NVIDIA's earnings will explode more, and that's possible. That's the hope, is that NVIDIA's earnings will explode more because of, well, the whole reason people are investing in NVIDIA right now. And it's obviously artificial intelligence. Everyone's investing in NVIDIA right now because it's seen as the best play for artificial intelligence going forward. And that might be the case because, quite frankly, when it comes to dedicated GPUs, graphic processing units, which are going to be the strongest and most powerful for providing data and services for, well, artificial intelligence, NVIDIA takes about 80 to 88% of the market share. That's really, really powerful. So when you have NVIDIA taking 80 to 80% of that market share, you kind of look and go, well, if you're going to want to invest in AI, maybe, just maybe, investing in NVIDIA is the place to do it. The problem is AI has really been hype trained up before we've actually started to confirm where AI revenues are going to come from. This is something that I always caution, and it is this idea of, okay, well, look, AI we know is going to be great. I think all of us agree that it's going to add productivity to us as individuals. If you're not becoming more productive because of artificial intelligence, you're probably going to end up getting left behind. You don't want to get left behind because if you get left behind, you're more likely to lose your job. You're less likely to get a promotion. You're less likely to essentially get ahead in life. So you want to incorporate AI in your life, and we want to invest in AI-related plays. This is why I have a program on building your wealth. So we've got programs on investing, stocks, and real estate. We do fundamental analysis on stocks. We'll do some fundamental analysis on NVIDIA here as well, and we'll do some earnings expectations. But also, we have a course on building your income, how to make more money and get SH19 done faster, featuring AI. The AI segment and how to actually incorporate AI in your life comes out June 1st. So check that out before the pricing goes up after that content drops. But what do we know about NVIDIA? Well, we know a lot. We know that NVIDIA is using TSMC to manufacture a lot of their chips, and they sell their GPUs to the software companies and server companies that use them for artificial intelligence. Think Microsoft, AWS, Google Cloud, all of them, when they use AI, most of the AI technology and processing and the compute power has been put through NVIDIA GPUs. Now, Google does have these TPUs, which we don't want to go into this super detail of what all these different processing units are. In that case, that's a tensor processing unit. And Amazon's also making its own server-based chipsets. But when it comes to actually processing artificial intelligence, NVIDIA has, like I said, 80% of the lead. Now, there are two different types of graphics units. There's sort of your integrated graphics chips, in which case NVIDIA actually has a very small market share of them. This is sort of for your regular consumer products, whether it's a laptop or whatever. But when it comes to dedicated graphic processing, which used to be Ethereum mining, for example, with GPUs, which no longer is, that's led their gaming revenue to absolutely tank. That's contributed to their earnings recession. That's gone now, right? But when we have dedicated uses for artificial intelligence, what are we looking for? We're looking for dedicated use chips, and NVIDIA is the 80 to 88% market share of this. And again, they're using TSMC to manufacture, but TSMC has also got a little bit of an up there valuation, probably also trading for somewhere right around a 3 peg. But people see NVIDIA as the really shovels of the gold mining race in artificial intelligence. And the reason people call it sort of a picks and shovels play is, again, we don't know which software companies are going to win when it comes to AI. We think that, oh, Google's going to win or OpenAI is going to win or all of these, maybe Microsoft will win because of their investments into, OpenAI or, Google's Bard will win. But the problem with this is we don't know yet which software is going to win. In my opinion, the best software is where people are going to flock to. As soon as there's a better chatbot, everybody goes over to that chatbot and dumps Bard and OpenAI behind. That's a big problem, especially since when you look at a company like Google in terms of an investment, you're looking at advertising revenue and network placements on websites representing 69% of the company's income. Well, if that income starts bleeding down because you need to search less, sure, AI will contribute to some sort of income at Google. How do we know how much income that's going to contribute? What I worry about is that AI will contribute revenue like this for Google, while their ad revenue goes down. So you'll see an increase of AI revenue here for Google, but you'll see search and advertising revenue decline, and you potentially have this massive loss as potentially some of these ads go to other AI platforms. We just don't have that certainty yet, but we do know that NVIDIA is probably your AI processing play. And that's exciting. This is one of the reasons NVIDIA has blown up so much recently. One of the things to know as well is that a lot of people use the NVIDIA architecture for actually building applications or programming on. And I'm not a programmer, but a lot of people use the software stack that NVIDIA uses to extract the power out of GPUs. The CUDA system is amazing for doing exactly this, and a lot of people prefer it. And when they prefer this for their server infrastructure, they have to use NVIDIA chips. AMD is not even close yet in terms of these AI processing chips that NVIDIA has. And they're just now, way after NVIDIA have they gotten into creating their own software stacks to try to compete with what NVIDIA has. So NVIDIA has some massive advantages. Now, what's also exciting, a lot of the CUDA, by the way, creates a massive moat for NVIDIA. So when you're investing in NVIDIA, you're not just creating or not just investing in this chip designer, you're also investing in their software and the moat that they have because of their software, whether it's the Omniverse or CUDA or otherwise. Now, it's worth noting that if you look at the top about 111 actual graphics units listed on Benchmark UL, what's remarkable is the first 111 chips basically show you a duopoly. You have AMD and NVIDIA. That's it when it comes to graphic units. But when it comes to AI ones for those servers, NVIDIA is the winner. It's not until the 112th chip that you actually get to an Intel graphic processing unit, which is pretty remarkable. Now, one of the downsides that you're seeing right now is unfortunately, NVIDIA has this huge backlog of inventory of GPUs because of the lack of use from Ethereum mining, and also everybody's already bought their new gaming PC during COVID. So you have this massive PC crush. You've got a massive inventory glut. And so you actually have some risk factors for NVIDIA in the short term that potentially inventory gluts are going to reduce pricing power at companies like NVIDIA. You're going to see reduced margins, and you're going to see reduced revenues before you actually see the AI revenues come through. Just because AI started becoming really exciting in the last 2 months doesn't mean all of a sudden every company under the sun is buying more NVIDIA chips. It could take years to really see AI play out at NVIDIA. So I think NVIDIA is really this play that you have to look at from a long-term point of view rather than something that you want to play short-term. I actually would be short-term bearish on NVIDIA trying to play earnings, mostly because we don't know. Maybe that's already built into the expectations. That's always the funny thing with earnings. When you look at earnings, you're looking at an implied one-day volatility movement of 4.7%. So 4.7% stock movement after this earnings doesn't seem that big. NVIDIA's EPS has beat 4 out of 8 times, so it's a total coin toss. Although their revenue has beat 7 out of 8 of the last times, so there's a good chance they'll beat on the top line again, but potentially again miss on the bottom line. So we'll see, but we know NVIDIA's had one heck of a run up recently because of AI, and I don't think AI is going to be contributing to a big portion of their revenue anytime soon, even though we do know and maybe their forecast and their guide will help, because if they give a really rosy full year guide, maybe that'll help boost the stock. but I really think it's going to be a minute before we see some of this revenue actually push through. NVIDIA doesn't really do 5G. We know this is more of a Qualcomm play, but some people have been asking about that. You've got competition coming for manufacturing, but that could actually contribute to NVIDIA. The more companies like Intel or Applied Materials or whatever, Micron in America that might end up manufacturing under the CHIPS Act, those companies will benefit from the stimulus checks the governments are handing out for manufacturing chips in the United States. This is good, and that could be good for potentially reducing some of the costs of NVIDIA actually having to manufacture chips, because remember, NVIDIA doesn't manufacture, they design and create software, and then they outsource the manufacturing. This is very typical. Only Intel really does both. They both design and manufacture. But even like a Tesla, they might design their own chips, but have somebody else manufacture them. So there is some excitement about this manufacturing coming to America, this sort of reshoring. Some worry that this is going to be inflationary and actually increase the cost of chips. And even the CEO of NVIDIA just today on the Financial Times argued that we have to be careful about more of these restrictions against China and sort of limiting China's exports, mostly because they could end up hurting NVIDIA's ability to actually sell this massive backlog of chips that they have. So there are some short-term concerns as well with the United States potentially being too aggressive against China, and how more of these chip bans could potentially actually encourage China to manufacture their own proprietary chips at the downside, or to the downside of NVIDIA. But just today in the Financial Times, you have the CEO of NVIDIA warning about enormous damage from the escalating battle over chips between Washington and Beijing, suggesting that you're tying Silicon Valley's hands behind their backs if China can't buy from the United States and they just end up building their own chips. So big warning there from Jensen, your CEO. Of course, China before all of these sanctions, or as many of these sanctions, China represented somewhere around 24% of NVIDIA's order book. So big chunk of it. I actually like investing in companies that have exposure to China generally, because I don't have to invest in Chinese companies to get Chinese growth. I can invest in American companies to get that growth. I like that. You did just also have an announcement between Apple and Broadcom, but that's more of a middle finger to Qualcomm than it is to NVIDIA. Intel dominates the CPU market, and maybe the integrated GPU market contributes to this. But really, NVIDIA, when it comes to dedicated chips and AI chips, they're almost the only game in town. On top of that, they're paying somewhere around 1.9% in taxes, because they run a lot of their revenue through subsidiaries, whether it's in the Cayman Islands, the Netherlands, or other countries in Europe. This has led a lot of people to be very frustrated over some of the tax credits and opportunities that they're able to do to avoid or take advantage of to avoid taxes. And a lot of people slam NVIDIA for this. NVIDIA sees this as just smart taxation, running some of their revenue even through Israel or Hong Kong. And they suggest this allows them to spend more money on R&D, which NVIDIA will also benefit from the CHIPS Act and R&D spending, which is great. Remember, this is stimulus money. It's basically free stimulus money, which is very exciting. I mean, these companies will benefit tremendously from investments directly from the government and money printing. So if you like investing where stimulus money is going, chips, manufacturing and chips. You have to be careful, though, because if you search like top chip companies in America, you might get search results like Frito-Lay or Lay's or whatever. It's a problem. So you have to be careful. But anyway, I just want to make sure we're doubling down on how important CUDA is, because a lot of current AI systems are actually trained on this coding infrastructure of CUDA. It is a massive moat for NVIDIA. It has been in development for 16 years. It's their proprietary software stack. And it lets you extract that power from the NVIDIA GPUs. So if you want to run processing through the GPUs rather than just the CPUs, you have to use CUDA. And CUDA is it's robust. It's great. It's a fantastic software. And so the competition just doesn't hold a candle to this. And so people like manufacturer or basically coding with this compared to AMD's Rock M, which is, sort of your closest second, but it's still a big second. It's probably, some people say it's 9 years behind CUDA. It probably isn't 9 full years behind. It's probably more like 2 or 3 years behind, but it came 9 years later. So it's also worth noting that NVIDIA has transitioned from gaming to data centers. And this has been critically important because gaming has just absolutely gotten destroyed post-COVID, because, again, everybody's already got their they've already got their new gaming PC, and gaming has been substantially less of a level of importance for NVIDIA's revenue. AMD's catching up on gaming as well, so maybe less of an area to really grow. But really, what's important to know is that right now the market is already pricing in about 25% growth for NVIDIA, and that's at a PEG ratio of 2.6, I think we said. 2.66. You're already paying a premium for that 25% growth. I think 306 is a high level. I'm not saying that NVIDIA deserves to go down. I wouldn't short this stock just because it's such a blindly easy pick for institutions to go, oh, we need AI exposure, just buy NVIDIA, like a drunken sailor because NVIDIA for artificial intelligence. That doesn't mean it's going to outperform other stocks, though, in the near term. So while I have exposure to NVIDIA, I'm not very excited about having a super high allocation to NVIDIA right now. Would I consider trimming before earnings? Potentially. Am I going to? I have no idea. I don't generally like playing earnings. I think it's very risky to do that. But I do think there's a lot of enthusiasm that's coming before the actual steak, right? Like the analogy of selling the sizzle before the steak. Yay, AI boom. Okay, where are the AI revenues? They'll be here in a few years. Like, they will come, but it's going to take a little minute. And at this PEG ratio, I think there are better deals to buy. We just had a report from Goldman Sachs that online retail is starting to explode again in April based on retail sales reports from April. And you're looking at Etsy trading at about a 1.3 times PEG. So it makes you wonder, okay, do you want to get into that kind of consumer discretionary? If you want AI, Tesla's much cheaper than NVIDIA right now at somewhere around a 1.6 to 1.8 PEG. You have to be careful when you do these calculations as well, not to use 2022 numbers. You have to go current year out. So 9 to 16, 18 months out is generally what I do with evaluations, because you're getting away from some of the whole of the earnings recession that you saw in 2022. So do keep in mind for expectations, we're looking at 92 cents of adjusted EPS. GAAP EPS, we're looking at 61 cents. Revenue expectation, we're looking at $6.52 billion. Net income, $2.27 billion expected. Data center revenue is expected to jump nicely, so hopefully that stays that way. Again, if you run some DCFs on these, you're really looking at growth already priced in. At least 25% is already priced in. Some are arguing, depending on how you run your DCF, that you could be sitting around 30% already priced in, 35% priced in. So a lot of richness already priced in. We'll leave it at that. But again, they're going to have a great growth story over the next decade. And it's possible that the growth that's been forecast before this AI boom hasn't yet really been updated to reflect how much growth is truly going to come from AI. Though I will say I think AI is going to be a big part of what we hear about in the earnings call today. So that'll be fascinating. And so I'm super excited to see what happens here. At the same time, again, AMD is really focused on gaming. And yes, they're going to focus on, to some extent, servers and AI for enterprise. The right focus, in my opinion, is on AI and these server chips. And I think NVIDIA is just playing the game correctly here. They've got the edge with CUDA. They've got the moat with CUDA. And they're dominant in the market. So there's little you could say about how NVIDIA is not going to be a massive beneficiary of AI. They almost certainly will be a massive beneficiary of AI. But the valuation today, hey, let's just say, I hope they crash over the next few earnings cycles so you could pick up NVIDIA cheaper maybe when the AI hype cycle dies down a little bit. Am I jumping up and down about buying it at 306? Hey, who knows? Maybe they give rosy guidance and they're up 10% and you're like, should have bought, but the valuation is rich. And usually the market does a good job of eventually leveling out those rich valuations. If I had to say what would be a little bit more of a fair price right now for NVIDIA, I'd probably say you'd want to be closer to, people are going to get mad at me saying it, but probably 200 to 250 would be more reasonable. If you were under 200, like we were for a while when I initiated my position in it around 150, well, then it was just juicy. But it's doubled since then. So anyway, remember, if you want all of my buy and sell alerts, join the Stocks and Psychology of Money group link down below. If you want to join me on the AI drop, make sure you join before June 1st for the How to Make More Money and Get SH9T Done Faster course members who are already part of the income course or getting that sector for free. And you can lock in your price as well before we increase the price again when the content actually comes out on June 1st. The other content's already in there, but the AI content's coming out on June 1st. So with that said, very excited about NVIDIA. Long-term, short-term, bearish. It doesn't mean I'm going to dump all of my NVIDIA exposure beforehand, though. But who knows? Maybe a little trim is in store. But anyway, that gives you some insight on NVIDIA. Hopefully it's useful for you even beyond this next earnings set that comes out. And I wouldn't bet against them long term for sure. Just like you shouldn't bet against those courses on building your wealth link down below. See you later. All right, welcome back. So, what do you think the biggest hurdle for Enphase is? Yeah, well, it's the housing market, right? And interest rates and housing. It's very, very expensive. JP Morgan supposed stock recommendations to their clients. I tagged you in on Twitter. No, happy to look at it. Too much coffee. I'm actually too little coffee right now. So, I'd actually like to get some more coffee. Full list on NVDA report. Interesting. Okay, we'll take a look at that. So we'll look at a few things here. So let's see what we got. So we've got a few things to cover here. So let's see what your tag is here on Twitter. How do I figure this out? Latest? At Real Me Kevin. Where's the Chase thing? Chase. I don't see it. Maybe DM me on Twitter because it's really annoying to try to find tags on Twitter, especially with people calling me a Karen for complaining about Tesla's ad. It's shit. It's not that hard. You dummies. Like, you don't want to be a blind. Like, I really do feel like some of these people on Twitter, they're just like, no. You said something bad about Tesla. No. You're a moron. That ad was horrible. Somebody's like, oh, it was just a testimonial video. It wasn't an ad. What a waste. What a waste of production. What an absolute waste. Absolutely stupid. Like, it's not even worth looking at these stupid, dumb, moronic comments because they're idiots. It's Tesla fanboys here. And like, I'm supposed to be considered a Tesla fanboy, but like, at least I'm realistic. Not this like blind drunk, Elon's the god. Tell me which nipple to suck. God. All right. So let's see here. Ad for soccer moms. It wasn't even, that's an insult to soccer moms. That ad is for soccer moms. It's an insult to them. That's like calling them stupid. Oh, the car will let you know if you're about to crash into the car in front of you. Tired of this. All right. Oh, let's a TikTok video, right? All right. Oh yeah, we'll get to go through. We'll go through some of these. All right. But first, there was something else I wanted to do before we do this. A few things. Oh, did I? Oh, let me add this really quickly. Hold on. A quick follow-up on NVIDIA. Some people want me to look at the balance sheet and the cash flow statement. Fine, I'll do that, okay? Here's the quick skinny on it. They've got about $13.2 billion of cash and marketable securities. They've got short-term liabilities in the Kevin math. I do Kevin math a certain way of about $5 billion and maybe about 11.6 in long-term debt. Free cash flow, you're sitting at about 3.8 billion. So you've got free cash flow. So the debts don't terribly much matter here. They've got plenty of operating room. Actually pretty good financials. What's this?
That a listing destination has not been decided, although it's possible that they choose to dual list in Mexico and the U.S. I'm also told this IPO will be a few years out, likely around.
Nobody cares about Citi and some stupid IPO. Okay, so now what else are we gonna get frustrated about? If I haven't mentioned yet, by the way, if you are a course member, make sure you go into the course member section of Discord. We have put out an announcement that we want to do financial audits, where basically we will visit you at your home, no cost, totally for free. And I want to basically go through course members' situations, your ambitions, your goals, your job, your finances, your investments, whatever. And we'll make a video out of it and we'll post it to the channel. So if you want to be part of that, make sure you fill out the form. It's under course member announcements in Discord. You can fill out that form. In the future, we'll probably open it up to other folks on the channel. But I think that'll be really exciting, and it'll give us something new to talk about on the channel, which should be pretty exciting. So very, very happy about that. So okay, now let's do a couple of other things here. All right, we're gonna open a few things up here. Maybe while I wait to get this, we could listen to some Doomberg. Is Doomberg available? Let's see if Doomberg's available. They are. Nope, that's the wrong thing. This button.
Washington awaiting some in several minutes to come out here at the 2 p.m. level. This is a personal note for me. Breaking now, Jenny Surain for Bloomberg writing here on Citigroup. Long ago and far away, Lisa, I was wrapped up in this directly. I had family members working for Banamex in Mexico, and they had the modest issue of an earthquake in Mexico City, and it was really something to see. Citigroup is still involved in a bank in Mexico, number 2 bank there, that they really, really want to unload. Jane Fraser has said,
business nightmares. That's a good idea. I'd love to look at businesses. So yeah, if you're a business owner, you can. Yeah, we'll come check out your business too.
Basically saying that they are not going to attempt to sell this particular unit, instead holding an IPO in 2025. This, Jane Fraser said in the statement, we concluded the optimal path to maximizing the value of Banamex for our shareholders and advancing our goal to simplify our firm is to pivot from our dual path approach to focus solely on the IPO of the business. How much, Tom, is this just pushing it out because valuations are?
Why do we care about this Citi IPO crap? Nobody cares. Oh, there's so much there's better stuff to talk about, like the debt ceiling. Oh God, I'm just kidding. It's so boring. So boring. I'm trying to get this stupid iPad to load a Good Notes here, but it's just absolutely impossible to load it on the fly. It's very annoying. But I will get to the bottom of it. Arg. Eventually we'll get it. So we'll just keep listening here for a second.
Staff employees, and their art collection is one of the largest collections of Mexican art in the world.
Sure.
And that will remain a part of the unit. So just if you think about the valuations and the idiosyncrasy of some of these firms.
The heritage of
there you
Mr.
go.
Riston and Mr. Reed back years and years, and others at Citigroup. And this is a big deal, folks, worth watching. I'm sure our Shonali Bassick will be all over this through the day. Right now, we digress to Michael Darda, Chief Economist, Macro Strategist, Roth MKM Partners. Michael, I want to look at the sum of the parts now, the cacophony that's out there, maybe to get beyond the debt ceiling. And let me just start as a center tendency. Can you acquire shares this morning? Do you want to, with your economic analysis, be in the market?
I think investors should be a bit cautious here, Tom. We have pretty high valuations in the equity market. The S&P 500 this year has been driven by a handful of mostly growth stocks with high valuations. So the S&P 500 Infotech Index is above 6 times sales, which prior to this cycle was only seen in 1999-2000. And even if you're looking at a forward PE for the infotech sector, 25 times isn't far away from the 28 times peak in 2021 that preceded a more than 30% collapse. And because interest rates are higher now, the 10-year Treasury yield, the stock to bond valuation metrics look even worse. So this is an environment, I think, where we're getting close to a recession. Obviously, you all have been talking about the debt ceiling shenanigans that are going on, and you have high stock market valuations at the same time. So in my mind here,
I don't honestly know where people get this idea from. It's like, oh, high stock market valuations. Could you provide some, like, these people just go on these shows to say crap because they think like people are gonna be like, yeah, that's right, stock market's still overvalued. Really? What stocks are still overvalued? Maybe consumer staples. Completely would agree with that. But no, that's probably not what you'd say. You'd probably get, oh, it's tech. Really? The actual sector that's going to really grow for the next 10 years? And once the Fed turns the money printer back on, people are going to be like, oh, man, I need growth at any cost again. And you're going to go right back to insane valuations, like really insane valuations. People are like, oh, but the PEG ratios and the PE ratios the last year are so high. Well, yeah, because you're looking into an earnings recession. That's normal when you have a profit recession. We looked at that yesterday. Bank of America's report was that our profit recession now actually has substantially lower valuations than the profit recessions of the Great Financial Crisis and during COVID. I don't know. Do people throw this stuff out and then they don't actually have real? I don't know. Okay, yeah, I got your DM on the Twitter thing. Thank you for that. All right, so it would take more than something that I'm going to be able to go through right now. So as far as Cathie Wood and Zoom, we need to talk about Zoom. We need to have a serious discussion because I'm a little nervous. I'm actually a lot nervous. And I want you to see it. Whether or not you like Zoom, I want you to see it. Holy smokers. I need to talk about Zoom, and no, not the fact that Cathie Wood apparently just bought $17.5 million of Zoom, or the fact that she is the largest fund holding Zoom. Well, let me rephrase that. Of the funds holding Zoom, Cathie's is the largest. And she's right after when it comes to institutions holding Zoom, she's only second to Vanguard for institutions holding Zoom. But her fund is it takes the number one spot for largest fund holding Zoom, with the largest allocations to Zoom. So in other words, Cathie Wood is very excited about Zoom. And so I thought to myself, all right, let's see what could potentially be so exciting about Zoom. So let's go through some of the numbers because, they should be pretty exciting if, where institutions are going to be allocating to Zoom, which was, a big COVID play. We know that, but maybe they're going to be innovative in the future, right? I remember after Zoom and Zoom meetings was sort of the COVID play, The idea was that Zoom was going to become really profitable by setting up Zoom rooms where they basically go in and set up your, VoIP connection. So you could have like a phone, a Zoom phone in the room, and like a Zoom, screen in the room. And you're basically setting up offices to do Zoom meetings in office spaces. That unfortunately has become a little bit of a problem given that companies like Amazon and Microsoft have canned plans to expand on offices. And now you're, dare I say, in an office recession. Sucks for the person who tried to lease me an office last year. Man, those people wanted to negotiate so hardball when I wanted to rent an office last April. I'm like, screw you. We're going into like a recessionary time. You want a hardball at those prices? Stay vacant. It's been a year and they just called me again. They're like, hey man, would you consider a lower price now? And I'm like, nope, now I don't want it at all. Anyway, Zoom. What do we got here? We got 2% growth, folks. 2% growth on revenue. That's fine, though, because we know revenue has exploded. And if you could be flat, maybe that's not necessarily a bad thing. Okay, what happened to G&A? Oh, okay, yeah, we've increased your G&A spend by 70%. Your OPEX in total is up 33% increase in OPEX. Your sales and marketing, wait a minute, to stay basically flat with revenue growth, your sales and marketing went from 362 million up 16.7% to 422 mil. So 16.7% increase in marketing just to get 2% growth. I don't know if it sounds that good. I also don't know what the hell you're researching at Zoom. I'm sorry, but I don't know how you could spend 45% more 45% more money on research and development at Zoom year over year, and when your revenue is going up 2%. Okay, I don't know, but here's the kicker, folks. Here's the real kicker. Zoom went from $113 million of profit, net income, in the first quarter of last year. And that went from 113 million down to 15 million. Their net income fell 87%. 87% decline. Somebody here in the comments says hospitals use Zoom for all meetings. Well, they're about to contribute to a nonprofit because an 87% decline in net income while you're increasing your R&D 45% and your marketing 16.7% is a little scary. I don't like those numbers. Now, we do have a cash flow statement here, and it appears that their stock-based compensation has skyrocketed by 34%. So they increased stock-based comp from 209 million to 282 million. They increased stock-based comp by $73 million. How interesting. Their net income fell by roughly that. $73 million increase in stock-based comp, and their net income fell by $97 million. In other words, as the company is having at least some profit, they're just burning it all on stock-based comp. So let's take a company that's not growing as much anymore and pay out more in stock-based comp, which now you actually have to give more shares for because the stock is falling in value. So you're just diluting existing shareholders even more. Now, at least they provided about $418 million in cash flow, which is nice. You did have free cash flow here. You had about $398 million of free cash flow. That's very good. Financing activities, you really didn't have any financing activities, which is great. And instead, you kind of just bought some marketable securities. That's fine. And if we look at the El Balancio sheet, we can look here. Let's see here. We've got a total cash and marketable securities of about $5.5 billion. Very good. The balance sheet is very robust. $5.5 billion in cash and marketable securities. You've got current liabilities, well, bills to pay of about $506 million. That's nothing compared to the cash they have. Then they have long-term other liabilities, non-current $71 million. Lease liabilities, I don't even consider. Another 71 mil over here. You've got less than $600 million in payables and debt compared to $5.5 billion in cash. Yeah, you're still diluting your shareholders to pay compensation. That blows my mind. You got plenty of cash to pay your workers, yet you're still diluting the stockholders instead. I mean, this is like a big middle finger to the shareholders. But then again, your income declining 80, your net income declining 80+% is also kind of a middle finger to shareholders. So now we're going to go look at the Zoom earnings call. And Zoom acquired this company called WorkVivo. Apparently, it is a, quote, leading employee communication app. And the goal is to form the heart of the company's digital ecosystem. So in other words, rather than just using like Google Chat or WhatsApp or whatever, they're acquiring a company for $200 million that lets them chat better inside the company. I hate to say it, but for some reason, I suspect that maybe, just maybe, the people at Zoom had some buddies at WorkVivo, and you ended up buying WorkVivo because I don't know how this product, this employee communication and engagement and experience, is worth $200 million. I'm not sure, but I kind of suspect that shareholders at Zoom once again got ripped off. Yeah. Okay, so anyway, so let's go then look at a little bit more of the earnings call. So going back to the earnings call a little bit, let's see what we have here. We did experience some distraction across the global sales team due to the previously announced headcount reduction. Oh no, the employees are distracted. Quick, let's spend $200 million on an app that we don't need, that already exists and we don't need to buy. What's actually funny is they talk about this acquisition later in the earnings call. And one of the analysts asked, like, hey, like, how is this acquisition actually going to help? Let's see where it was. I want to find that because that segment was kind of funny. But I should have put a star next to it. And we'll have to find it. All I could find right now is that for some reason, Eric, the CEO, wants you to know that things are right. Take a look at this just on screen here for a moment, if you would, in response to one of the questions here. Yeah. Okay. So anyway, so as you could tell, I'm not extremely optimistic on what I'm seeing here. The analyst questions were entertaining, to say the least. Let's go through some of those right now. Let's get to some of the best ones. So there was some talk about Microsoft competing. Zoom's response was basically like, no, we feel great about being able to compete. They talk about Zoom being #1 for telemedicine. We had a comment about hospitals and Zoom use. I think that's a good slam on Teladoc. But then again, Teladoc is just another one of those that's totally been highly overvalued. And they had I still remember their intellectual property write-downs that they had, which was remarkable because they basically propped up their balance sheet based on their brand value at Teladoc. But then now you have Zoom encroaching on them, which is also overvalued in my opinion. But I thought this was kind of fun. Listen to this. This was interesting. Right here. Here are a few milestones. Non-GAAP gross margin of 80.5% increased our long-term target. I want you to know when they say non-GAAP, they're basically saying, let's strip out the compensation that we're paying people in shares and just pretend that this metric actually matters. But wait for it, folks. Wait for it. I kid you not. Wait for it, right? At last. These are their words. I'm just going to read it here. These are their words. And last, the moment you have all been waiting for, Zoom Phone surpassed 10% of revenue in this quarter. This is like supposed to be a mic drop moment, and it's honestly cringe. They literally said, the moment you have all been waiting for, Zoom Phone. No, we're not talking about a cell phone. We're talking about an office phone. How could you invest in this? This is not innovative. This is frustrating. I'm just like angry going through this. Anyway, I want to look a little bit more at their earnings call for a moment. I want to look at the analyst response. Yeah. Here we go. So look at this. Here's the question. Thank you for taking my question, Eric. I want to dig into this WorkVivo acquisition. Do you see that as more of a long-term opportunity, or do you see that as something we could think of as some sort of technology you can cross-sell into the base in the near term? Can you give a little bit more to elaborate in terms of the revenue opportunity? So remember, they bought an employee chat app for $200 million, which I personally think was probably just their friends or something they gave a bailout to or something. I don't know that. I can't confirm that. But I think that. Because why would you pay $200 million for this employee chat app? I don't know. It blows my mind. But okay. So what do we have? Yes, good question. So first of all, if you look at our collaboration platform, right? We really want to offer a unified communication and collaboration platform. Customers, I can leave in the room platform, right? I think today is one of the problems we are facing. Customer also mentioned for us as well, right? Either this transcript is bad or this is a horrible earnings call so far. Quite often we send all kind of message either to email. It's really hard to find, not scalable, or you send message to chat, bar all those public channels, right? Customers also want to essentially see a video message, right? I want to share the entire employee base and maybe a department of news, right? All those kind of accounting, right? Are there any other better ways to share and engage these employees, right? I think that's the reason why we think WorkVivo can play a bigger role, right? To put those kind of use cases, right? It's not only for the short term, it's a key missing element for our entire product portfolio, but also in the long run. Also will help us a lot because of the AI, right? Folks, because of the AI, right? I can't handle it. I can't handle this, right? I can't handle it. This is literally the trashiest, most embarrassing excuse for spending millions of dollars on an acquisition I have ever seen in my life. They could use Discord, right? They could use WhatsApp or Google Chat. This is absolutely disgusting. This is so embarrassing. This is so embarrassing. It's like, I want to call it fraud, but it's not fraud. It's just bad. It's just a bad company. I don't know how you can invest in this. This is so bad. I mean, maybe they'll turn it around magically, right? Because how do you make sure you have more data, right? Oh, here we go. Here we go. We need to farm more data, right? And really collaborating, communication-related data, right? It's WorkVivo for sure. Every day we use engaged with our employees. We are what we platform. You will generate lots of data, right? All those are very, I would say, is relevant and meaningful, right? How to lever the AI, right? That's why in the long run, certainly it can help us more. Look at this line right here. How to lever the AI, right? I'm sorry, I'm being so mean because this is literally embarrassing. This is like a 5-year-old. It's a 5-year-old responding, hey man, you just spent $200 million acquiring WorkVivo. Can you explain why? The AI, right? I want to cry. It's so bad. The analyst is just like, great. Thank you. What the hell, dude? Eric, you're 53 years old. I know you're from China, but you're supposed to be a billionaire. Get your shit together. This is not together. This is embarrassing. If this guy could be a billionaire, All 3,624 of you watching me bitch about this live right now are going to become billionaires. I can't handle it. If you want to learn how to actually be productive with AI, check out my programs on Building Your Wealth, link down below, especially the one on how to make more money. Price is going up when we drop that lecture set on June 1st. As always, appreciate you being here, subscribing, sharing the videos. This is exactly what you don't want to see in a company earnings call. And hopefully you learned a lot, right? So, yeah, that does it for our well, because you want to lever AI, right? Anyway, thanks, right? Oh. All right. What is this?
Saying they're going to get together this morning. Honestly, I think that the bigger market moving event right now would be if they didn't get together and they weren't talking, right? I mean, basically, people, if there is not a sense of some progress, that will be more unnerving than a sense that the tick by tick by tick is actually happening.
I don't know what to make of it other than how many times have I seen this before, and it's a ballet. And I go back to the reality that Senator McConnell and President Biden have been down this road 4,000 times. And I do think Speaker McCarthy understands that.
Well, but to Greg Peters' point, at what point does that become a real risk? Because we're going to be down this road again. We have been down this road before. And at a certain point, it has a consequence. There is some sort of longer term sort of trenchant response.
If they wait later in the evening, we can hear the results as we're getting up to do surveillance. I mean, if they do it at 3 a.m. or 4 a.m., we can have breaking news, team coverage.
I think people are sick of it. And this is really the question is there a feeling of urgency enough to avoid a mistake kind of technical default? This
has been an extraordinary day. Thank you for our team with some really important conversations here on the events of the moment. The 2-year yield, 4.30%, near 4.40% yesterday. Please stay with us on radio and television. This is Bloomberg.
Yeah, whatever.
As relatively defensive within the markets, Lisa, in part because of the large cash balances, stability, et cetera. And I'm wondering if you think that gets, rethought in terms of a thesis.
From a longer term basis, we still view the tech sector as something that's very attractive. So for clients with horizons greater than a year, we are recommending that they look at that as a potential interest of sector to continue to commit to. But to your point, in the near term, there could be more volatility for the tech sector in particular. And there are a couple of reasons for that. While the longer term growth prospects are very good, we certainly have seen a very strong run up this year. In fact, if you look at the percentage of gains that they represent, for example, of the S&P 500, it is historically high, even given the fact that in the last few years, we also saw some nice runs from tech, but it's even historically high relative to that this year. And so certainly you've just got more of a valuation situation where it can pull back. And then certainly on top of where interest rates are heading, that has been a buoy to the tech sectors simply because, again, as rates have come down, those future profits have been more attractive. And again, with some uncertainty about how long the Fed may stay higher for longer, that could also cause tech valuations to waver to some extent.
Yeah, there might also be some concern about China, Lisa, and I'm wondering if you think that's a wild card right now and should be factored into valuations. We're looking ahead to the first cabinet level meeting between the Commerce Secretary in the United States and her counterpart in China happening in D.C. Tomorrow, Thursday. A lot at stake given the recent Micron ban.
Well, certainly to your point, there is just a general trend worldwide to really move to more onshoring and really being able to source supplies from local partners or nearby partners. And that, again, could affect companies like tech companies or others that have very large export market. So again, it's another factor, and we will just have to see how some of those trends play out. Again, there are incentives on the other side, again, for governments to continue to cooperate. So again, we will just want to see how those talks continue to play out.
Lisa, thank you. Thanks for your thoughts. Lisa Erickson.
All right, let's get a final check on the markets this morning. As we've been showing you through the morning, we are looking at the futures in the red. Dow futures off by about 115 points. Now, we did get that news that the negotiations on the debt ceiling default will be continuing on trying to get a deal with that. That's what Kevin McCarthy just told reporters. It didn't seem to help much when it comes to the futures. S&P futures still off by about 20. The NASDAQ down by 70. 10-year has been sitting, at least lately, if you've been watching this, it's been sitting right about that same threshold of 3.684%. 2-year is almost at 4.3% this morning. And I want to thank both Melissa Lee and Robert Frank for being here today.
Pleasure.
It's been great. That does it for us today. Make sure you join us tomorrow.
Yeah, it's really interesting how much the debt ceiling is weighing on the market. And it kind of goes to show that if this debt ceiling crap was gone, the market would probably be rallying pretty substantially over this idea of a Fed pause. But no, you got to ruin it with all this crap about the debt ceiling. You got to destroy it. Everyone's on commercial. Boring. All right, let's see what we got here now.
Our roadmap's going to begin, though, with that elusive D.C. debt deal. No signs of progress, but negotiators are set to meet again today with Wall Street on watch.
Plus, retail bounce. Shares of Kohl's, Urban Outfitters, and Abercrombie all are rallying rather sharply on quarterly results. And Palo Alto CEO says AI will transform the software industry. He joined Jim last night on Mad Money. Palo Alto shares, by the way, also are up ahead of the open.
Let's begin with the markets. NASDAQ coming off its worst daily performance in about a month. Dow hoping to avoid 4 straight days of losses, as we did get some good commentary on the markets and the economy here at our CEO Council Summit, Jim. David Solomon talking about sort of a view that you share, which is that inflation is going to be hard to tamp down.
We can't seem to get anything going in terms of wage, just even stabilization, not increase. Yesterday, there was a conference call, release, Toll Brothers. The Toll Brothers, the release was incredible. Doug Yearley's great. He's $1 million homes. The average price of a Toll Brothers house is now $1 million. I remember when it was $600,000 just a few years ago. David, sold out. Sold out. It doesn't matter what rates are doing. The wealth, if you read what Doug Yearley said, he's a straight shooting CEO, you would say, okay, we got to stop this juggernaut. PMI strong yesterday. This thing was, it's like, look, there are so many wealthy people. Now, I'm not saying we need great redistribution or anything. I'm just saying that it's unaffected by mortgage rates.
In the face of steadily rising mortgage rates is my question. And look at that chart. So what is that? Why?
It's because there's just tremendous inflation in the system. People just keep making more money, and these guys can charge whatever they want. And I think that that's kind of what our problem is. That's when you talk about sticky, it's not necessarily the generic food at a Walmart. They can't stop this.
Mortgage 30-year fix back to 7. First time since March 9th. And Jim uses the term sticky, which is getting used a lot around here anyway. This is what David Solomon told us yesterday at our council summit.
More in the camp that we're probably going to have a recession is because I think that inflation is going to be stubborn. I don't necessarily see rates really, easing at the end of the year based on what I see now. And so I think it's stickier and harder, but also uncertain. And there are a lot of factors that are going to have to be balanced, and it's just not clear.
You changing your mind on June? What's going on?
No, I think you can still take a pause in June because we got to see what damage is being done. And look, we're also in this. Every day we come in, market's bad. This is starting to get very reminiscent. If you go back to that period in 2011 where you realize every day, I'm looking at the S&P and Dow, every day they were down as we went closer and closer.
1345, 13.
And then 12 goes. It's every single day was down. And so you start getting a sense of, well, we got to pull back. We got to see what really is going to happen. Now, the people, and Dave, you know this, the people who are on Social Security who so-called might miss a payment are not Toll Brothers people. But I don't think the Fed cares. I think the Fed says, listen, we just can't have major home builders raising prices 10, 15, 20% every year. We just can't. It's not sustainable for our nation. And rents going higher, not sustainable. But that's people who have enough money to be able to move up. Now, remember, Doug Yearley would tell you this whole problem stems to some degree from the low mortgage that people got.
Yeah.
And they don't want to give up their mortgage.
I mean, by the way, Solomon's been saying that for some time in terms of his recession prediction.
No,
but yesterday, Jim, you were talking the other side in terms of inflation. We were talking about the consumer being weak in terms of discretionary. Remember? I mean, only travel. Other than that, everything seems weak.
Look,
and so I don't know.
It's tough. I mean, Lowe's was, I thought, a good quarter, but only because it had been guided down after Home Depot. But, Lowe's, look, Marvin Ellison's a really straight shooting guy. And he didn't have a lot of good things to say about how things were going.
Abercrombie killed it, by the way. I mean, they're up like 18% right now after this. Their EPS was expected to be like 2.3 cents or something crazy like that. 2.3 pennies is what they were expecting to make in terms of earnings. They actually 2.9. They came in with 39 cents though, big beat, and their net sales were expected to be 814.4, and they came in with 836. It's crazy because the more you look around, it's like, wait a minute, people are still spending money. Consumer savings are actually rising. The savings rate is going up. Retail sales are going up. How is this possible? I don't know. People keep making money. Maybe they've done really well, taking all the courses on how to build your wealth to make more money. Good. More money to spend. But it is pretty impressive.
In your checks of Burlington.
Yes.
Right.
Yes.
Yes, which I know you got that. No, that's like the price of a Burlington store. Kingsbury he's a genius. And he's turning around Kohl's. I'm not kidding. Kohl's is turning. Now, I know sometimes the rebranding, it's like Sephora, and then underneath it is Kohl's. But I'm going to Kohl's. I'm going to go back to Kohl's.
Buy slacks?
I'll get some slacks. I got some $14 slacks at TJ the other day.
Really? Are you really saying that Kohl's is coming back?
I'm saying that Kingsbury.
I think it's got to be cold where they're filming right now because they're filming in Santa Barbara right now. That's kind of what it looks like outside over here as well. It's gloomy right now. It's been so May gray. It's gross. It's 58 right now outside. So hopefully they got some heat lamps or something like that because they don't really look cold. But it's a nice view. Santa Barbara is gorgeous. Keep in mind, 5-year break-even rate, by the way, has started to tick up again a little bit, which isn't great. It's off those beautiful, delicious lows we were seeing. Here's the chart. You could see that we're still not higher than where we were earlier the month, but it is slowly climbing a little bit here. I'd like to see this actually just plummet, but that's not happening. I gotta make some more coffee soon.
Because if you're looking at what we do every day in the stock market, you're not thinking your house is going up in value, but your house is going up in value. That's what's so strange, and that's because of the shortage. All these home builders just talk endlessly about millions of homes. We need millions more homes, not hundreds of thousands.
He's right.
So you're just really positive on the home builders.
I shouldn't be.
By the way,
you're supposed to hate them.
I know. We've been talking about that for the last 8 months, and all they do is go up in terms of the stocks.
Look, we love the value companies on how their gross margins are, right? Because that indicates how much competition there is, whether they're in trouble. The gross margins far exceeded what Toll Brothers thought they could do. And Toll Brothers, their gross margin should be slashed right here. Right. They should be getting crushed. They're crushing it. Strongest group in the S&P.
I got to tell you, it leaves me confused, though, in terms of whether this pause is really a pause for any length of time. I mean, yesterday, again, we're talking about the consumer not being great, but then we're coming back to the idea, well, wages are still fairly strong. Yes. And today, then you're talking about housing continuing to be on fire. I don't know. What do I look at?
Layoffs, and we don't have them. I mean,
other than
how many can Zuckerberg give us?
Other than it Meta,
Zuckerberg, he's been the gift of layoffs. He gives them to us every day. Nothing today.
Well, Musk did a pretty good job there for a while too. That was very quick.
But no, I mean, people losing jobs. It's not a nice thing, but we have not seen. I don't know. There's a weird moment. I'm sure I should have told our guys to queue it up. Nikesh Arora on Palo Alto last night was the first guy to basically say, "Look, I now know where to save. I can save. I can let go of a lot of people,
really,
and make a lot more money
because of AI and machine
because
learning."
of AI.
I'm starting to hear it. It seems almost hard to imagine that companies have adjusted that quickly to understanding in terms of what they can use to replace people. But I'm starting to hear it, which is a little worrisome in a way for, I don't know, just generally speaking, that it's moving that quickly.
It is. And I thought what was interesting, I mean, he mentioned it.
All righty. I got to make more coffee. I appreciate y'all being here, but there's not much more to talk about. A little bit on the debt ceiling. Okay. Yeah. Nonsense about Biden finding more and more cuts unacceptable. Republicans wanting cuts to things like education, rental aid, nutrition for poor families, SNAP program benefits. It's almost the same red lines over and over again. Hopefully we get some more progress. I'll post a video if there's more progress, but otherwise right now there's not much news from what we covered yesterday. FOMC minutes, wait for those will be out at 11. Then we've got Elon Musk at 3 p.m. so stay tuned for that, as Elon will be on Twitter Spaces. I'll cover that with Ron DeSantis. I think that should be pretty entertaining. So I'm going to make some coffee and then we'll jump on over to the course member live stream. Thank you so much for being here. Check out the programs of Building Wealth link down below. Remember, if you are a course member, make sure to go to that Discord under the course member announcements section and fill out your information. If you want a free financial audit, we'll come to you. It'll make for good content on the channel. Thanks, folks. Goodbye.